On this week's episode, I'm excited to have Charles Reed join us as a guest. Charles is a certified public accountant and a U.S. tax court practitioner. He's a member of the Internal Revenue Service Advisory Council and the founder of GetPayroll. Mr. Reed's companies have provided full-service payroll services, payroll tax services, and other payroll-related services since 1991. Charles is an accomplished senior executive and entrepreneur with more than 50 years of financial leadership experience in a broad range of industries and an author of 4 books, the latest one being The Payroll Book, a guide for small businesses and startups. Introducing U.S. Tax Court Practitioner and CPA, Charles Reed. Welcome to the BJ Kyla Show, everyone. On today's episode, I'm excited to have Charles Reed with us. He is a CPA and has a lot of experience with taxes, and I know tax season's coming up here in 2023, so really excited for this conversation with Charles. And Charles, how about you talk about what you do and how you got to where you are?
VJ, it's a pleasure to be here. Thank you for having me. I'm a Midwestern boy. I grew up in Iowa. After high school, joined the Marine Corps, spent 4 years in the service, 2 years overseas, including a combat tour in Vietnam. Came back, was stationed in Kansas City, met and married my wife. She was 10 years older than I was and had 5 children. I claim insanity, but we were married for 45 years until she passed. After military, I found that business then, like now, does not value military experience well, doesn't understand it because they haven't been there, so they don't understand. So I went to school. I got my BBA, my MBA, sat for and passed my CPA exam while I was still in graduate school. I went to work for Texas Instruments, spent 15 years in the corporate world, large corporations, small corporations, family businesses, startups, turnarounds. Great experience. In my early 40s, I realized I was never going to run a major corporation. I did not have the political skills. So Ruth and I started our own business. Hung out my shingle as a CPA, went into business. Been doing that now for over 30 years. About 10 years ago, I sold off the accounting practice side to my partner and kept the payroll side. So what we do now is payroll and payroll taxes for small and medium-sized businesses around the United States.
Wow, I'm really sorry to hear about your wife, and thank you so much for going through your story and going through all that. I first of all, thank you so much for sharing all that. And you said you sold off the tax or the part of your accounting practice, but now you okay.
Now I focus on payroll. I still do some taxes. I'm also a U.S. tax court practitioner, so I do some tax resolution work where CPAs, EAs get things that are beyond their ability to handle. So I take them to tax court for them. I have yet to lose a tax court case. I'm sure I will someday, but so far the record's really good.
So far, 100%. I love it. So for the audience, could you talk a little bit about tax court and why someone would need to go there, and is it a good or bad thing to be there?
The tax court is the only federal court where a non-attorney can practice. You have to take a test, and it's involved and so on. But I became one here about 10 years ago. And the reason for tax court is when you finally get down to loggerheads with the IRS and they issue a notice of determination. And currently, within much disarray as the service is in, sometimes that comes out before you've really finished negotiations. And at that point in time, you have 90 days to do something. Go to tax court or district court. And if you don't, the IRS position becomes final. So this is your last chance to do something. So by filing a petition with the tax court, it costs $60. And if you're broke, they'll let you do it for free. You get a whole nother bite at the apple. Next thing you do is you get really smart, educated, experienced people you're dealing with that aren't in the collections realm. They're not IRS collections. They're IRS appeals agents that specifically deal with docketed appeals. Once the petition is docketed, it goes to docketed appeals. And so you get some very, very sophisticated, knowledgeable people you're dealing with that will talk to you. And at this point in time, talking to the IRS sometimes is almost impossible. But once you go to tax court and docketed appeals, that appeals officer will call you or send you a letter and give you a phone number to call, and you can set up a time and talk to them. You also can provide proof, documentation, details that you may have provided to the IRS in the past, and they haven't even looked at. We've had a couple of cases recently where we'd provided the same information to the IRS, or my clients had, and they hadn't even bothered with it. But when we provided it to the appeals officer in docketed appeals, they looked at it. So you get a whole nother bite at the apple. On top of that, 95% of all U.S. tax court cases are settled pre-court, okay? So they are incentivized to settle, to give you a deal. Collections is not. Collections, they just want to collect. Docket appeals wants to get it off their desk, get it settled. They also, if the case has any kinds of problems from their point of view, they don't want to litigate it, because if they litigate it, it's what they call hazards of litigation. They may lose entirely. Also, if there is something unusual and it goes to court and you win, there is now a precedent that the service has to live with. So if it's one of those things they're collecting money on and it's kind of iffy, they don't want a court case on it, because then every EA, CPA, and lawyer will look at that and go, hey, I got a precedent now. No, you can't have this. The court has already ruled on it. So go away. So there's a lot of advantages to using tax court. As a final thing, you can't get what you want in negotiations with the service. Tax court is your final destination, and they're much more in tuned to the taxpayer than collections is. Okay?
Good.
Not that they're friendly to taxpayers, don't misunderstand me, but they are more attuned. They will work with you. If you go pro se, which means the taxpayer does it themselves, and you can file a pro se petition. You don't need me or an attorney if you don't want. I advise you not to go to court without a specialist in it, but the court will help you do that and walk you through the procedure so you get your day in court. It's just one more appeal. And dealing with the IRS, it's like sales. It's a whole series of no's followed by a single yes. Then you get your yes, you shut up and go away.
That's great. You just got to be silent, but continue trying to get it. Okay, so
well, once you get it, you shut up and go away. But in the meantime, you just bitch and bitch and bitch and bitch, because sooner or later you're going to find somebody that's going to go, okay, I'll buy that. At that point, you win. Only need one of them.
So kind of going into the reason that you're in court, is it most likely due to audits or not related to that? Or why would someone even be in that court? I know it's another chance to bite the apple, but what was the first reason that you're even in trouble with the IRS usually?
Well, there's normally something that's not resolved. It normally comes from an audit, or that's what it normally comes from. Because once you fill out the tax return the way you think it should be and you submit it, if they accept it, there's nothing to argue about. Okay? If they come back and say, this is a hobby, not a business. These aren't legitimate deductions. No, you didn't provide this proof in a way that we'll accept it. Okay? These are things that the IRS does, some of which they should not do. If you don't have proof of a deduction, if there is a reasonable belief that you incurred that deduction, it's deductible, and the service should accept that. In other words, okay, you want to prove mileage to a job site. Well, they disagree with, they say, no, we're not going to allow that because you don't have a mileage log. Well, I live here, I sleep here, I eat here. This is my residence. This is the job site, and I can prove I was there 50 times last year. It's 20 miles away, okay? I'm going to deduct 50 times 40 miles. No, I don't have a mileage log done every day, but I can prove I was there 50 times. I live here. I had to get there back and forth somehow. So, yeah, you have to allow that deduction. And they do. They won't, but they're required to. So it could be simple things. We have a case currently where a foreign college issued a document proving the tuition credit and so on for one twin daughter, but not the other one because she'd had to come back to the States early for some medical treatment, and they never issued one, and now they won't. Well, we can prove she was there, and we can prove she was in school. We have the transcripts and everything else. It's just that we don't have that one document. Well, the service is not accepting the proof because they're in disarray. So we've had to file a tax court petition. The docketed appeals officer will look at that and go, okay, and that'll be the end of it.
Got it. Thanks so much for going through that. I know with the tax code, there's a lot more deductions for business owners than there are for individuals. And right, most of the tax code is written to save you money through all these deductions than actually about raising your taxes. Is that accurate?
No, the tax code is written to collect revenue. Okay. It is also written to give tax breaks to congressional donors. It is also written to influence public policy. None of those are valid reasons, okay, except to raise revenue. But the Congress tries to influence our behavior in writing the tax code. Child deductions. Well, they want you to have children. So they give you credits to have children. Okay. If they didn't want you to have children, they wouldn't give those kinds of credits. The whole thing with commuting expenses, business expenses, all these things are designed to encourage different activities by the American people. So it's public policy. It's bad taxes, but it's public policy, and that's Congress. So, and then there's a lot of things that are written strictly for donors that want particular tax breaks. And if you contribute enough to your congressman, you can probably get him to propose any tax break you want. Whether it goes through or not, that's a different choice, but it's politics.
Yeah, I know one major reason that people start businesses is potentially for the tax deductions, even though they shouldn't for that. But it's a reason some people start it compared to not having a business. Are there any?
Oh,
Yeah, go ahead.
you should live in a deductible world. And the way to do that is to have a business, whether it be a sideline or a gig. There's lots of things. A couple of my favorites. There was a doctor in Florida who had a big fishing boat, and he deducted the entire cost. And the IRS said, you can't do that. And he says, no, I have that fishing boat to increase revenue in my practice that's taxable income, and therefore it's a business expense. And he showed through his logs that he invited other doctors for these fishing trips. And if a doctor did not refer him patients, they did not get a third invitation to go fishing. And it went to court, and the court agreed with him that this was marketing to increase his practice revenue, which was taxable income, and therefore an expense to increase taxable income is a deductible income. Another one, CPA. He loved Hawaii. He was in California. So he put an ad in the Hawaiian paper for tax services, got a client, went to Hawaii, did the taxes, and over the course of the next 20 years, built up quite a practice in Hawaii. So every spring, he'd go to Hawaii for several weeks to do taxes for clients, and it was all deductible. His whole Hawaiian trip was deductible. So, yeah, you want to live in a deductible world.
That's great. And you only have to work 4 hours a day when you're traveling, correct, to get that whole trip deductible? Or is that inaccurate?
No, you just have to have a business reason for the trip. I have a client I have to go see in California. My entire trip out there, my entire trip back is deductible. Now, the third night in the hotel isn't, because I saw the client on the first day or the second day, okay? And the meals will only be deductible to a certain extent, but the entire travel there and back will be deductible. And then there's other things. For instance, if you're an independent contractor and you're going from the job site to the house, if you take a side trip for a mile or two to the grocery store, that mile or two is not deductible. But since it's de minimis, very small, they ignore it. So you don't track that mileage out of your way. You just track to and from. So lots of little tricks.
Okay, that's really interesting. So let's say I'm going to a conference for educational purposes and I am just starting a business, but I don't have revenue coming in yet. Would that be deductible, or do you need to have revenue coming in to deduct a educational conference?
Just had one of these in tax court. The lady had, in fact, she was a podcaster. And after the podcast, she said, I got some tax situations. Can we talk? And I said, sure. And we took her case and took it to tax court. She had a large sum of expenses for conferences and training and coaching and so on for a business she was developing with her podcast and her book and so on. And the service said no. And so we went to court and they said yes. And so it was all deductible. It was a substantial sum of money. Now, I did explain to her that sooner or later you're going to have to start earning money or they are going to start denying them, okay? You can't do it forever, but you don't have to be profitable the first year or every year. You just have to have a profit motive, and you have to prove you're trying to make a profit. Normally, it's over a period of 5 years, okay? In the horse industry, in the horse trading, horse breeding, it can be 7. But you have to make a profit periodically to show that it really is a business. You also have to show there's a business purpose. I have some gentlemen who are professional gamblers. They have other businesses, but they gamble maybe 1,000 hours a year playing poker. But they track every time they play, how much it costs them, how much they lose, how much they win, books they buy, coaching they get, trips they take, tournaments they enter, so on and so forth, and track all that. And that goes on a Schedule C as a business. And they don't always make money every year. But as long as they make money periodically, okay, it's a deduction. Though for most of us, our gambling would only be, our winnings would be taxable and our losses would not be, unless we itemize, would not be reduce our winnings. If we get a W-2G for that slot machine hit, we just have to pay it, and that's just life. So
It's because
you
we're
want to
not
live in a
professional
deductible.
gamblers.
We don't have a business. Exactly.
Got it. Okay. So live in a deductible world. Okay. So you can have a W-2 job and you're getting those 401ks and, Roth IRAs, all the retirement accounts. What other deductions are there for individuals who did not have businesses?
Well, obviously, mortgage. The employee business expenses went away, so you can't deduct what you're spending in your business. It's difficult. There's not a whole lot. Obviously, the expenses for the 401k and those things, which all should be coming out, and you only get the net. So there's not a whole lot other than mortgage interest, car registration, business mileage, medical deductions, charitable deductions that you need to track. Yeah, your used underwear that you give to Goodwill is deductible.
Wow.
Not retail value, but probably $1 a piece. All these things do add up if you itemize. With the increase in standard deduction here a few years ago, a lot of people stopped optimizing because the standard deduction was large enough that it no longer made sense to itemize. So yeah, have a side gig, have something you do, have a profitable hobby. There's a million ways to make money. I run across new ways to make money every day. Do something besides just your W-2 job and live in that deductible world.
I think that's a great piece of advice, especially for everyone listening to this. They're interested in entrepreneurship. So if you get something out of this, make sure you start your business and start deducting, living in a deductible world. I love that piece of advice. What are some common businesses you see that people start mostly for the deduction? I mean, of course, they're making money, but something that you see that's pretty common.
I don't know of anything that's common. There's everything, whether it be web development apps, clothing lines, trunk sellers, Avon, used to be Fuller Brush, the home chef thing where you sell the cooking utensils. There's one that's erotica and devices for housewives and their husbands. There's all kinds of things. I got one franchise. He took his 401k. He's now in the garage refinishing business, floor refinishing business, gardening. There's just
the list just goes on. Anything.
I mean, there's a million things. Anything, whatever you want to do and like to do. There's a way to make money in it. It can be sewing. It can be knitting. It can be there's all kinds of podcasts for housewives that want to get into something. Retired people that want to get into something. The guy on the internet that says you're going to make $1 gazillion and never work a day or invest $1, don't listen to him. Okay, it's a scam. But there are a million ways to make money. Just whatever you want to do, whatever feels good to you, look into it. Anybody who wants to be an entrepreneur can be. Not everybody's suited for it. Don't misunderstand that. If you're trying to make a living as an entrepreneur, it can be really tough at times. First 10 years, it was 80 hours a week. We survived, Ruth and I, and made a living and prospered. And it got better, and I don't work that hard anymore. I got a great staff, but the first 10 years were tough. I did a presentation on a panel, and somebody said, can you talk about, for an entrepreneur, work-life balance? And I just cracked up and laughed, and I said, there is no such thing for an entrepreneur. It's work. That's all it is. One of the big things I had to settle with my wife after we went into business, she would tend to talk about business, and we would all the time. We get home after dinner, get ready for bed, get into bed, and she'd have one more problem she wanted to talk about. She'd get it off her chest. She'd roll over and go to sleep. And I'd sit there and worry about it until 2 or 3 in the morning, not being able to sleep. So we came up with an agreement after a year that after dinner, we didn't talk about business. until the next morning. That made for some very late dinners occasionally, but at least it wasn't talked about in bed and leave me awake half the night.
So this kind of brings me to my next question I have about going to dinner with your spouse who is a business partner or who may not be. Is that deductible if you talk business, or what's kind of the rule to get it deductible?
Entertainment has gotten much, much tougher. It used to be, yeah, you could deduct that. So anymore, if it's your spouse, probably not. I'm not going to recommend you work that. You take your staff to lunch, absolutely. One of the things I did, a real estate agent, and she talked to me about this. Her and three others met once a week, and she wanted to know if her meals were deductible. And I said, no, yours aren't. But here's what I suggest: one of you pay for it each week. The three others are deductible to you, okay? But you'll only pay once out of every 4 weeks, okay? And 75% of the meal will be deductible. The rest of the time, they'll be deducting your meal. So if you do it like that, and so that's what they started doing. Again, live in a deductible world. Your meal's not deductible, but people you're entertaining are. And when they entertain you, it's deductible to them. So this is a truism with Congress and tax laws. Congress writes these things using staff who are not, in many cases, tax experts. And they write these laws, and then a million CPAs and attorneys immediately start looking at ways to get around them. And they find them because it's in our best interest to find ways around it for our clients. So you've got tax laws written by a few people, and then you've got millions of very educated, motivated people trying to find ways around them. And we do all the time.
Got it. Kind of going back to the audit subject, right? You're encouraging people to live in a deductible world, and I'm sure it's very easy to get carried away with deductions. What's the best way to avoid an audit? Or is an audit even something to be feared? And what's the best way to avoid it?
An audit means you've been chosen. That's all. You've been chosen to be examined. It doesn't mean you owe anything, okay? If you keep good records, and that's critical, okay? If you keep good records and stay within the law, an audit's not to be feared. It's just a pain, it's something you have to go through. It's part of the system. For instance, they'll want to look at your credit card statements because you've claimed some entertainment. Well, they'll start looking through that, and if you can prove everything on that credit card statement was business related, once they've gone through about 20 items and it's all business, they're done. An audit doesn't mean that they're going to examine every item on everything. It means they're going to test and look. When you do an audit as a CPA, you test the results. There's a count of inventory, and you go out and you test count a portion of it. And if every test count is perfect, then you can assume that the rest of the count is perfect. The auditors for the IRS do the same thing. They'll come in and look at a selection of items. And if they're perfect, they're done. If they're not, then they're going to want to look at more and more and more. And if there's enough things that are wrong, they'll throw out the entire deduction and you have to start over. So have good records, have detailed records. There's apps, there's spreadsheets, there's all kinds of things to track this. There's apps that'll automatically track your mileage on your phone. When you get in your car, it's tracking it automatically. You just have to tell it later what it was for, business or personal. So there's all kinds of ways to do it now that are technologically much easier than they used to be. So do that. Track them all. Talk to your CPA. He'll help you. Track them all. Be precise. Have all your records. And as long as you have all the records of all your deductions and they're legitimate, an audit's a breeze.
Got it. Charles, you said that an audit is basically you got chosen, but there must be criteria to get chosen, or is it completely random?
Both. There are some random audits because that's how you catch people. You do random audits. But if you have deductions that are out of the norm, that red flags your return. Now, this criteria, one of my professors did this years ago. The IRS gets together every year or so and puts together an algorithm of what the average return should look like. And if you fall outside of that, then that's a red flag. You get several red flags, and that will trigger an audit. Too many charitable deductions, business deductions that are out of the norm, personal deductions that are out of the norm. If you're showing an income of $20,000 a year and show a $3 million mortgage interest, you're probably going to get audited, okay? And frankly, if you have certain deductions, childcare, earned income, these items, which tend to go to lower income people, are full of fraud. And so they are audited more often. And that's the dichotomy is, well, why are they auditing poor people? Well, poor people have deductions that are taken advantage of by fraudsters on a constant basis. Therefore, they're audited more because they are hotbeds of fraud. Rich people don't take these deductions that are fraudulent, so they don't fall into that selection criteria for those deductions. On the whole, rich people get audited more than poor people. There are more audits of poor people because there are more poor people, okay? There's fewer millionaires than there are working people. So, yeah, but the very rich, they get audited every year. And businesses. When I worked for JCPenney's, headquarters had been moved here to Dallas. The IRS had an office up on the third floor, and there were two auditors there full time that did nothing but look at transactions for JCPenney's. So yes, major corporations get audited constantly. Now you hear this one. Well, these major corporations don't pay any taxes. Don't complain to the corporation, complain to your congressman. He wrote or she wrote the law that they're following. They're not disobeying the law. They're not cheating. They're taking advantage of the laws that Congress wrote. And why wouldn't they? What? You take advantage of them if you can, right? You deduct your home mortgage interest. You deduct your business expenses. You deduct the child care credit. You take an earned income credit. All these things are legitimate. Why would you not take advantage of them? Well, corporations do the exact same thing, and they have very sophisticated people who work very hard at making sure they get every possible deduction and reduce the taxes, which allows them to pay higher dividends to their shareholders. So if you have a 401k that has stock, you don't want those businesses paying large taxes. You want to pay large dividends to your 401k. 6 of one, half dozen of the other, guys.
Thank you so much for going through that. I thought that's really interesting. 2 full-time auditors for JCPenney. And
yeah, at headquarters.
That was part of the team
one.
now.
That was there at the office. Yeah. We had lunch with them, We didn't talk to them, but we had lunch with them.
Thank you for going through that. I want to shift the conversation a little bit more to your company, GetPayroll, and tell us a little bit about it. I know we spent the whole time talking about the IRS and taxes, but let's talk about the payroll side.
Well, understand that 75% of all federal revenue comes through the payroll systems in either withholdings or employment taxes. It funds all Social Security and Medicare as well. So it's a huge number, and we pay millions, hundreds of millions of dollars a year for our clients into the U.S. Treasury. We do payroll for small and medium-sized businesses around the country. Solo entrepreneurs, that's just one person that has a corporation and therefore is an employee and has to pay taxes and file forms and so on. But we do all the filing for them. They just tell us what they need to pay people in terms of salary or hours paid. We calculate it all. We calculate all the taxes. We make all the deposits, file all the forms, send out direct deposits, send out checks, whatever's necessary, and then solve the problems that the IRS creates. The IRS makes millions of mistakes a year. They're dealing with obsolete technology and civil servants. So we're constantly dealing with the IRS. We take, as a CPA, I'm able to take a 2848. It's an IRS limited power of attorney, and it allows me to actually advocate with the Internal Revenue Service for my clients. So I'm not just a service that's sending them paperwork. I can actually get on the phone, stand in place of the client, and negotiate and solve problems and act for my clients. And this is very important because I'm a professional. This is what I do for a living. The IRS understands that. The IRS can't pull the wool over my eyes like they will over taxpayers' eyes. The IRS will tell you things that aren't true. They will also ignore some of their own policies and regulations if they think it's in their best interest. They shouldn't, but they do. I know the IRS manual. I know the regulations. I've dealt with these people for 30 years. I know when they're BSing me and I know when they're not. I know when to say, no, I want to talk to your supervisor. Or no, I'm going to file a 12153 for a due process hearing in appeals, or I'm going to take this to appeals, or I'm going to take it to tax court. One of the things as a tax court practitioner I do is many times we get to appeals with this, and I send them a dummy petition, a petition that I would file with the tax court, but I have not. And that lays out for them legally what my position is, and in many cases, that's enough for them to go, oh, okay, we give up, rather than have to go to tax court. So that's one of the advantages I have. We also do things. We do all direct deposits. We have debit cards for the people. We take care of all the state stuff. We take care of the local stuff. We do crypto payroll, where you can pay your employees in cryptocurrency. If that's what they want, they have to agree to it. We do all kinds of things. We're very early in green payroll, internet payroll. My forms guy called me here a couple of years ago and said, Charles, what do we have to do to get your business back? I said, what do you mean? He said, well, you haven't ordered any checks in a year. I went, well, we're not using them. We're doing all direct deposit. So we keep up on the technology. We keep up on the software. We provide better security. One of the big crimes in this country is check fraud. Well, if you're issuing checks to your employees, one of them's going to fall into the hands of fraudsters, and you're going to find yourself with check fraud problems. We issue the checks out of our trust account, which has what was called POS Pay, positive pay. We send to our bank a file of every check we issue. And if a check comes in that doesn't match that criteria, they notify us, and we have the opportunity to either approve it or have it sent back. So we don't get fraudulent checks because we don't approve them. We have that second bite. We look at them, and they have to match the criteria of what we've issued. So if a guy takes a check and starts making, and we've had it happen in the past, we got a call from our bank. Somebody was passing fraudulent checks at the various banks. We said, no, we don't know anything about it. That young lady spent Christmas in jail because she didn't get out of the branch fast enough, and they caught her. So she spent the week in one of the local hooscows, that Christmas weekend in the hooscow here a few years ago, and I could have cared less. Don't cheat me. So the security we provide, the expertise we provide, we're really free. What we save our clients in terms of time, energy, effort, and money is normally less than our fee, and they just don't have to worry about it. So, before I ever started this, I used to outsource my payroll. I think my favorite analogy on this is when I grew up, Pele was the world's best soccer player. He recently passed. But if you take Pele, the great athlete he was, and you'd put him at second base in a New York Yankees uniform, he would be totally lost. He wouldn't know the game, the rules, the plays, the players, or any of the things. As great an athlete as he was, he'd be lost. Well, you take an entrepreneur who knows his business, keeps his clients happy, produces a product, produces a service. He's great at it. He's making money. He's successful. Now you tell him, okay, now go handle the IRS. He's Pele at second base. He's lost. Okay? Look, I don't make my own clothes. I don't build my own cars. I don't even mow my own lawn. I outsource those things. Okay? And for a businessman not to do outsourcing I think is foolish. Work with your expertise, work with your knowledge, your skill set, and outsource the non-essential things to people who are experts. That's what I do, and I think other people should do the same.
I agree. Everyone needs a Charles, right?
I think so. If you're in business, you need me.
Absolutely.
My number is
Charles. Yes. No. Tell us your number. I mean, one of the questions is where can our audience get in touch with you?
972-353-0000. That's my phone number. Just ask for Charles. We're at GetPayroll.com. It's on the net. We got lots of stuff out there. We've got a YouTube channel, GetPayroll.com. We got all kinds of educational videos and all kinds of fun videos. The most recent Halloween one was a blast with the Army of the Dead. It was the IRS agent rising up as vampires, as zombies. Excuse me. So we have a lot of fun with it. A lot of education, a lot of fun. So
that's wonderful. What's your favorite book that you recommend to the audience?
My favorite book, In Search of Excellence, probably my favorite business book. It's one I've read and reread. But for entrepreneurs, there's a book I buy by the dozen and give to clients. And it's Michael Gerber's The E-Myth Revisited. It teaches you how to work on your business, not in your business. It was given to me. I'd been in business, 5-6 years, and was tearing what little hair I had left at the time out and thinking of just firing everybody and moving it back into the game room. And a friend of mine gave me that book, and I read it, and it's made all the difference in the world. It's allowed me to do things and be successful in a way that I couldn't conceive of at the time. So I buy it literally a dozen at a time. It's required reading for every new employee, and I give it out to clients and to acquaintances on a regular basis because that's how valuable I think it is.
That's incredible. I'll definitely put it in the show notes. Charles, thank you. Thank you so much for your time. This has been an incredible conversation.
My pleasure, BJ. Thank you for having me.
Hey, it's VJ. If you liked this video, you are going to love this video. Make sure you click it, leave questions in the comments, and I'm here to help however I can. Hope you have a great day.